Let's move on and invite Dharmesh Kant, Head of Research at Chola Securities. He joins us on the show. Dharmesh, the stock to watch will be Avenue Supermarts. On the top line, it's come largely in line with the pre-quarter update, but there is a decline in the operating margins by 30 basis points. Will that be a dampener?
Yeah, good morning, Rima. Definitely, yes. I mean, the numbers are very muted, and if I may say so, it's a dismal set of numbers by Avenue Supermarts. And this is a trend for the last 2 years. The numbers have been consistently declining from 25-30% kind of a growth to 15-10, and now 6-7. And this quarter they have posted around 3.8% kind of a PAT growth, which will not augur well with the kind of valuation they are setting on. And 5 cities they have closed down stores. I mean, Amritsar, Chandigarh, Ghaziabad, and all the stores have been closing down, and they are not finding traction in the non-food business. So that's a big worry. This is the place where others have been finding pretty traction, and the attractive valuations are given to those kind of companies. So I think further stock price correction is likely on the cards, and maybe 10-15% from here on. In next one quarter, the stock price should correct. And then they have to do something out of the box to pull out of this, declining trend of growth, depleting operating margins. And I don't know how they are going to fix this up, but it's a sell from our end.
Okay. All right. Hi, Dharmesh. Good morning and good to see you, Ben. We've got initial numbers coming in from the tech space, TCS, Tata Elxsi as well that came out with the set of numbers today. We have HCL Tech as well. How are you all approaching tech, and what do you like from the pack?
Yeah, good morning, Nigel. I mean, TCS numbers were like just run of the mill. Nothing new on that count. Tata Elxsi was a disappointment, definitely. The narrative has now changed from, normal, BFSI or other verticals of the software products which they were providing to AI-enabled products. So AI narrative is definitely in place. How much this catch up and how soon the catch up can happen and how it translates to better deal wins with a longer time horizon is yet to be seen. I think HCL Tech will also be more or less around the estimates of the numbers they are likely to report today. But I think it's more to do with a bottoms-up approach, and there we have come out with an initiating coverage on Orion Pro Solutions Limited. The company has seen a remarkable turnaround since 2022, post the change in the management at the top level. And this is one company which has consistently delivered 30% kind of a revenue and profitability growth with stable margins of 20 to 22%. And we had interacted with the management. They sounded very, positive on the run rate of 30% kind of a growth being maintained for next 2-3 years. And thereafter, they are more aggressive about the run rate on the growth types. So banking and transaction, which is 53% of the revenue, has been doing well. They have won an order from SBI, which opens the door for other, private and non-private banks and other NBFCs in place. Because once you get an order from SBI, it's easier to get your iCash Pro, that is the cash management product, to be enrolled to other banking system. They have also bought REII, which is again artificial intelligence enabled. And what REII has done, it has enabled all their products with AI inbuilt. So that's doing good cash benefit for them. Data center is one play which they have been pretty aggressive about, and it's the architecture stack of the data center, where again we see a good traction going forward and open loop transit mobility. So we are penciling in a profitability of around 300 crores for FY27. And even if you value at 30 times P multiple, so 1675 is the target price which have come out with, where the PEG ratio is less than 1.
That's Orion Pro. Dharmesh, good morning. Thanks for joining us. So HCL Tech, which reports today, and we'll put out a preview as well, you think should be good? Should be better than expected?
Yeah, good morning, Prashant. I mean, HCL Tech has a habit of surprising us straight. So the guidance is 3 to 5% for this FY26. So one has to see how the guidance pans out, whether they maintain this 3 to 5% or there's some tweaking out 20-25 basis point forward. And the deal wins, how they are going to report on that two counts. Margin, more or less, it will be around 17 to 19% kind of a trajectory. We don't expect that. I am very interested in looking at the body language and the commentary of the management, because that is what can, give reflective. Last 2 years, if you have noticed the body language of all IT companies, though they have said they are cautiously optimistic, but the body language was very weak. Even the TCS management I found a very muted kind of a body language this time around. So let's see how HCL Tech does it. But structurally, we are not a buyer on large cap IT companies as yet.
Dharmesh, Tata Com got very excited, 10% up. TCS's data center play could potentially benefit the entire Tata ecosystem, but particularly Tata Communication for the data center to data center connectivity, perhaps monetization of real estate, if TCS decides to set up a data center in the land owned by Tata Communication. I mean, are we reading too much into this?
Yeah, difficult to say that, Rima, but logically it does fit the entire, synergies out there. And I think it's more of a pre-positioning with the Tata Communication, the type of build-up we have seen. So there's a scope headroom of the stock price to may go up even 22,000 or 2,100 is likely on the cards. And they've also rolled out their 4G network, so on a pan-India basis. So that is also likely to benefit them on the revenue count. So net, I think it's difficult to, exactly guess what, but logically, all the points which you have highlighted does fit the bill.
Dharmesh, great chatting with you this Monday morning. Thank you very much for joining in. Get in